Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Tuesday evening, the 27th of April, 2021. We're about 7:20 at night. Now, the day tomorrow is all going to be about, first, we're going to get the FOMC statement. You get in the morning some wholesale numbers and some of your normal other numbers, but the real gist of the day is going to be at 1 o'clock, the FOMC statement, and then what the Fed chair says at 1:30 as he goes into his press conference. After that, it's going to be President Biden speaking at night to Congress. That'll be televised on all the news stations. The president has already backed away from doing a tax on estates. That's off the table again. He still wants to hold for the capital gains tax at 39.6%. I predict it has no chance of being anything near that. I didn't say there couldn't be a raise, but I don't think that you're going to get anything in the area close to that. I seriously doubt it'll have a 3 in front of it. And as for taking up the highest earners tax, there might be an appetite for that. They can afford an extra 1.5 is what the market's going to say, and everybody else. But the other taxes, the estate, nah. And then getting to the next step, to the capital gains, I'm definitely against it. Big time, for all the reasons that investors, the word is investors, have about that, and the returns that you put for putting your money at risk. But that's me, and there's other people. Dollar up a little bit, foreign currencies sort of mediocre right here. You're still up in the energy complex. OPEC Plus appears they're going to just hold the line right now. That was expected, and they'll address in May and June what they want to do if they're going to increase production. They see what's going on in Brazil and in India, and they're very sensitive to it. In the grain markets, acts like a market that got ahead of itself. A break, yeah, but I don't know how short-lived it's going to be. And the reason I say that, any bad weather is just going to send this market off. You're already in China at the point where for the first time wheat is being used as a substitute for corn because corn's getting more expensive than wheat. That's definitely not the norm in these markets. And you can see in our markets it's not like that, but in China it is. So that's something to be considering. As you can see in the S&P, you're still up a 1/4 point for the market at this point. That's an all-time high on a weekly chart. You're just sort of sitting right here. You ran out of sizzle for the moment. Doesn't mean the trend isn't up. It is. Higher lows, higher highs are in place. Look at all the moving averages. You're over everything. The market has got the Bollinger Band now, and I told you yesterday it was going to start wrapping its arms around prices. It is. It's starting to fall. It's at 41.81 1/4. And in terms of momentum, you're still embedded. As long as you're embedded, I'm in the bull camp. You don't have that in the Dow and some of the others. We'll see that in a minute. If the market takes out 41.6375, it could be a sign you want to return back to the 18-week average of closes. We'll see how the market reacts to everything tomorrow. You know, the algorithms are going to jump in before you could even react. In the NASDAQ, you're just overbought. Since you lost that embedded reading, you've gone nowhere. The market here cannot get back up to that Bollinger Band. So that's what's so important. Bollinger Bands are, to me, one of the most important tools on a chart. So if you don't know how to use them, learn. If you want to go to the second degree of learning them, in other words, get what I call the doctorate degree in them, go look on our website, www.iraepstein.com, and the very top, go to education and hit the Enhanced Bollinger Band course. I have a video there that explains what I do in that. When you look at the Dow, you lost the embedded reading and you lost your momentum ever since then. You can see that. It's pretty clear. And that's what's going on. I still think the market's going to go back to the 18-day average. We'll see if I'm right or wrong on this. That doesn't mean that the market's all in all bearish, but it'd be the first one that could be. Any close tomorrow under 33,714 looks bearish on this chart. And I think that you would attract the bears. You could be getting your first serious break. I'm not saying it'll happen. I'm saying that's what it would take to start it. You don't have that in the Russell. You've gone from the lower Bollinger Band to the upper and you've stalled. The odds of staying over these Bollinger Bands, 5% of the time. So they're important support, resistance points, but when they narrow in, they're telling you that they're not going to stay that way. The chart will not stay with narrow bands long. So it goes sideways until it breaks out. When it breaks out, you want to catch those moves as best as you can. I give you an idea on how to do that as long as you get the embedded reading with it. In the VIX cash, the chart pattern going into all this is lower highs, lower lows, right at and staying over the 18-day average. Neutral as can be, and momentum has gone flat. That makes all the sense. I've been telling traders that I'm pretty friendly with that ask me my opinion on interest rates, and I'm going, we have taken this market and had a neat rally, but we're going to get ready for this week on GDP numbers on Thursday. I don't expect the Fed's going to change anything right now. That's okay. We're seeing the inflation gradually creep. If you get 7% growth for the GDP, and then you're talking the next report's 8 to 10% growth, how do you keep interest rates this cheap in the long end? I know what the Fed can do in the short end, but that's what I've been talking. The 10 years sort of agreeing with me. The 10-year finally broke down. And now you've got a market that looks like it's returned to the 18-day average of closes. This pattern has been broken, and now you're testing a lower quadrant for the first time. Will we settle under it's going to be important because you failed back here, but if you do, maybe the 131.09 level is somewhere to go. If interest rates go up, the question is, how's the dollar going to relate to it? Is it going to be bearish, the dollar, because we see it as choking the economy, or add value to the dollar because the dollar pays more in interest? I'll let you figure out that one. The chart is bearish right now. Resistance, the 100-day average, until you lose that embedded reading down here. I say that the pros stay short. In the euro, I say the pros staying long as that's in place. It's a flip-flop. This is using the 100-day average as support. The dollar's using it as resistance right now. In the British pound, this nice correction hasn't been able to get under the 18-day average. So I'm viewing it on the chart. It's a correction in a market that's even bigger than this, and ultimately still on the longer-term charts, to me at least, looking still good to the upside. Bitcoin got pretty cheap. It's come back $7,000, $8,000 from this break low that we had 3 days ago. This is not for the lighthearted or faint-hearted, I guess is the right word. You couldn't get me into something like that. It's just too volatile, which also tells me it's not a storage of value. It's just a vehicle for speculating. In the Brent versus WTI crude, you're back under the 18-day average of closes. You actually, if we take a look, yesterday you were not. Today you did this, and you're not improving it tonight. So that to me tells me that all of a sudden, whatever OPEC's doing, they want to bring the spread difference between WTI and Brent back into play. And most interesting is I got buy signals potentially here. Now, let me just show you what I'm seeing. The low on this day is 64.57. We come up, we come down. Unfortunately, it hit 64.57. Took out the 58. If I said that, it was 64.58, one tick under. Now you're back over. So it's not a buy signal, but it kept its upward momentum, and all of a sudden momentum is flattened out. It's not pointing down. WTI threw out the buy signal. It's got higher lows, higher highs. The target upper Bollinger Band, if it wants to make a run like it did back here, it already pulled back and got its feet under it. Momentum is pointing up too, and bias. Gasoline, I think that might have been the correction. Now, you're still caught in these two bands, and until you break out of them, it's going to be mishmash. You're going to get chopped apart, going crazy. Why doesn't it go through on the upside? Why didn't it carry through here? It's got to come out of this. I want this to stay longer than this sideways. It builds power, and I do think it's going to break out to the upside ultimately, as I think the American driver is just going to go crazy. As you heard me talk, if you don't understand Bollinger Bands, I think they're now one of the most important tools you can have in your arsenal. Why don't you take a look at what I've created here for you and learn something from it? I'll talk to you later.